Hello, this is the overview of the discussion questions for Chapter 17. Question 1. Explain the role of GAO, Treasury, OMB, and Financial Accounting Report in the federal government. So, you just got to remember that GAO is Government Accountability Office, is essentially an auditor on behalf of the United States Congress. So it's a watchdog organization. So what they do is they conduct audits of federal agencies. They write reports on various issues of importance, kind of investigative reports and so on. Department of the Treasury, of course, is the main kind of a Ministry of Finance, effectively, the United States government. They're in charge of, printing money and determining, dispersing funds to federal agencies. So they're kind of like essentially a bank with various federal agencies. So we'll talk later about we'll talk about the account with the Treasury of every agency. So that's kind of like essentially a bank account for every agency that there is with the federal with the Department of the Treasury. Office of the Management and Budget is the office within the presidential administration that's in charge of essentially determining the budgetary policy for various agencies. Question 2. Compare the gap hierarchy for the federal government, for state and local governments. That's not particularly an important question. So, obviously but the hierarchy is essentially determines the level of authority of various standards, interpretations, and so on. So, we have one for U.S. GAAP under FASB. There's one for FASAB. For federal government, there's one for under GASB, under the state and local government. And it determines, what standard is more important, what interpretation is more important or not. So, for the federal government GAAP, there are 4 categories of principles, like GASB only has 2 levels in hierarchy. For both FASAB and GASB, the highest level are statements and interpretations issued either by FASAB or GASB. The second category below that are the technical bulletins. AICPA industry and accounting guides are also considered under that category by FASAB insofar as they apply to federal government. And for FASAB, there's also 2 more categories, category C and D. So category C consists of technical releases of accounting and auditing policy committee of FASAB, and D, a guidance of implementation guidance issued by FASAB. So just the most important thing to remember is that that the statements and interpretations are the highest level of authority. That's really what's most relevant. Question 3. According to FASAB conceptual framework, there are 4 objectives federal financial reporting. Discuss the 4 objectives and explain why the focus of FASAB objectives differs from that of GASB. Now, so here again, what you want to remember is that federal government kind of has a separate role in state and local government, and so you got to remember that that's reflected in the different types of objectives. So the objectives under FASAB are for the federal financial reporting and budgetary integrity, which basically makes sure that agencies don't go over their appropriated amounts. Operating performance has to do about measurement, how they spend their money. Stewardship, making sure they take proper care of the assets that they're entrusted with. And adequacy of systems and controls. So those are the kinds of the things that the federal government is focused on. And because of that, FASAB's objectives are broader in essence. The main objective, what they share in common with the GASB objective, is the notion of accountability. That the stakeholders of both federal and state governments, meaning the taxpayer, have the right to hold the government accountable, and that's the main objective of financial reporting. All right. The next question. explain the question 4. Explain the differences among these accounts: estimated revenues, other appropriations realized, fund balance with the Treasury. So estimated revenues are, of course, budgeted revenues for state and local governments, and federal agent the counterpart on the federal level are other appropriations realized. So what you want to go to, if you want to understand, I have a video on this, but page 718 of the textbook gets you through different stages of various journal entries. So, for example, the first time we see the notion of other appropriations realized is in the very first journal entry in the bottom of page 718. So, where Congress passes an appropriation of $2.5 million, and so you debit other appropriations realized, credit on the portion of authority, right? So that's $2.5 million available theoretically that has been appropriated for the federal agency by the federal government, by U.S. Congress to spend. Simultaneously with that, in the proprietary, other appropriations realized are recorded in the budgetary financial statements, on the budgetary accounting system, and then on the proprietary accounting system, which follows accrual basis of accounting, you debit fund balance with the Treasury and credit unexpended appropriations. Fund balance with the Treasury, as I already mentioned, is kind of like essentially a bank account that the federal agency has with the Treasury. So that answers the question, third part of it. Question 17.5. So net position for a federal agency is similar to net position of state local government. Do you agree or disagree? In some ways, it's true. Net position is still fundamentally just a difference between assets and liabilities of an agency with a state and local. But there's also, the state position of the net position of the federal agency could be split in two parts: unexpended appropriations and cumulative results of operations, which is different than classification of net position of the state and local government. Unexpended appropriations is the amount of entities' appropriations represented by undelivered orders and unobligated balances, right? So it's kind of remaining appropriations which you didn't touch yet. And cumulative results of operations is the measured since the inception of the activity as the net difference between expenses, losses, financial sources.
You've been reading for some time now, but you haven't stopped to practice.
Which includes appropriations, revenues, and gains. So essentially, basically appropriations that you would spend, and any revenues and gains that you may get from other sources. It's kind of like somewhat similar conceptually to retained earnings, but not exactly that. So you don't have that for the state and local government. You don't have that. So question 17.6. Defining the reporting entity at the federal level is complicated by different perspectives from which federal government can be viewed. What are those three perspectives? How are they defined? And how they interrelate? So the textbook talks about the organizational perspective, the budget perspective, and the program perspective. So the organizational one is the easiest one to understand, of course, because it kind of looks at agencies sort of as almost like a standalone entity, right? So it has, its assets, its buildings, its mission, and so on. It's an organization from the perspective, as the book says, organizational chart. Then you have the budgetary perspective. That's the perspective from which it's funded by the federal government, right? What is the budgetary account structure? What are the expenditures, appropriations, and funds? And the third one is the program perspective, and that has to do with the activities of the agency. What are the different things that it's doing with its money, how it's spending its money? Of course, those things have to overlap to a degree, right? But of course, the organization, one simple observation is that one agency might have multiple programs, but also multiple programs could be administered by multiple agencies. Same thing, programs could come from different budgetary accounts. So there's quite a bit of overlap, and many multiple organizational units, multiple agencies could overlap in their programs and their budgetary accounts. 17.7. The federal government uses two groups of funds. Identify the two groups of funds and the funds associated with each group. Compare the funds to those used by state and local governments. So obviously there is a general fund. So I'm sorry, there's the federal funds and trust funds. Within federal funds, there are general funds, special funds, and revolving funds. And the trust funds would be trust funds and trust revolving funds. So general fund is the same as the general fund of the state and local operations. That's basically kind of kind of like one catch-all type of fund where the government spends its money and so on. And it makes appropriations from a general fund. Special funds are established for some sort of a particular purpose, which is typically non-business types. They're kind of like special revenue funds used by state and local governments. And revolving funds are established for business type activities, making them similar to proprietary funds of state and local governments. For the trust funds, you have trust funds and trust revolving funds. Trust funds are established by a law or statute for a particular purpose, and trust revolving funds are funds where they're funded or money is used on a continued basis. So one example of the revolving funds would be Veterans Special Life Insurance Fund, Employee Life Insurance Fund, or I would say is a Social Security Fund as well, right? Because the money comes in and out of it all the time. 17.8, what are stewardship assets? How does accounting of stewardship assets differ from general property, plant, and equipment? So you can think of every agency having like its own buildings, operations, its equipment that they use. Those are general property, plant, and equipment. But also think of National Park Service. All the national parks are, starting with the one here in Washington D.C. on National Mall, are property of or kind of administered by National Park Service. So those are examples of stewardship assets, things like parks, museums, works of art that government owns. Though the key point is that stewardship assets are not included in the financial statements of the federal agency. And the stewardship assets could be two types: heritage assets and stewardship land. So, Yosemite National Park is an example of stewardship land that the federal government owns. So that's 17.8. 17.9. The two tracks. What are the two tracks in dual accounting systems? Explain the purpose of each track. Relate each track to state and local government dual track accounting. What's the budgetary track and the proprietary track, as I already mentioned. And again, I'm going to refer you to page 718, 719. Very nicely lays out all the journal entries under budgetary and proprietary accounting, and they correspond to your budgetary journal entries that we talked about in state and local government, and whatever the accounting that they use, modified accrual or accrual for reporting purposes in the fund level or government-wide level. 1710. What are the components of PER, and why would the federal agency go? Where would federal agency go to find out requirements between PER? PER, of course, stands for Performance Accountability Report, and there are several components such as agency head message, management discussion and analysis, performance reports, most importantly for us, financial statements, of course, and other accompanying information. OMB Circular A136 is a source of guidance on how to prepare a PER, and it's available just by Googling it. It's available on OMB, Office of Management and Budget website. And that's concludes the review of questions for Chapter 17.